Good afternoon, everyone. Welcome to another set of videos in which we continue to learn about Business Central. Today is going to be a continuation of basics of accounting. So this is the second video that I have created in order for you to understand how accounting actually plays a role in Business Central, since Business Central is an accounting-oriented ERP system. So today I'm going to actually go through some transactions and then we'll see how it actually occurs in Business Central. So I've actually prepared some of the materials, some of the transactions that I'm going to walk through, and you'll understand how it actually works in the ERP system. This is mostly for someone who has a technical background, has no form of understanding of some accounting, which is crucial for being a functional consultant. So in order for you to be able to be successfully talk to CPA, for instance, or finance oriented majors and individuals, you need to understand some basics accounting. And then my first video is all about the basics, some of the verbiage, the terminology that you need to know. And the second video is going to touch base on the actual transactions. And this will actually help you understand the foundational work of debits and credits. Just for a recap, debit is basically what comes in and credit is what goes out. This was the rule number one that I had emphasized over and over in my first part of this video. And the second rule of thumb is you debit all your expenses and you credit all your incomes and profits. So if you don't understand why you debit all your expenses and losses, refer back to my first video of the basics of accounting and actually give you detailed information, knowledge base on what basis we debit all the expenses. So today's video, let's just jump right into it. It's actually about transactions. So this is Business Central right here in front of you, the home page. As a functional consultant, when you log in, this would be your home page. And let me actually go into the actual transactions. So I have a scenario prepared, so as you could see here. The scenario is that Mr. Toronto here, who's based in Canada, starts a furniture business, and he floats a company named ABC Furniture and starts to invest some money into the business along with some other investors. We'll skip the part of the other investors for now, but we'll focus on investing his money into the business. So the scenario one is introduction to the capital. So when Mr. Toronto actually invests money into the bank as an investor, he carried out the following transaction. So the first column is debit and credit. So in the debit, he actually brought in money. So that means the asset amount, the type of account, the asset account is going to hit in a positive manner because the money is being brought in. And the bank account is where the money is being held. So that's why the account detail is the bank account. So refer back to my first video if you don't know about type of accounts that we talked about. But in this video, we'll continue to just a little bit deeper into the actual transactions, so you'll have a better understanding of how the accounting is working behind the scenes. So in this case, the class of account is real and the credit is capital. So the capital account is being credited. The detail account details could be shares, and the class of account is personal. So in order for you to understand, this is the basic scenario. Make sure that you know what the account details are. In our case, is bank account and shares. So these are hypothetical accounts that I try to make as closely as possible to what I have seen in my work of implementation over the years. But obviously these account details can change, but the type of account does not change. So the account details can or cannot change, but most likely bank account will always stay the same, but the capital account can change at the subledger. So in this case, you need to understand that what was brought in was the money into the bank account. So that's what we're debiting there. And what was taken out was the capital account, and which was the shares. So the reason we're actually crediting the shares is think it from a business perspective. So the investors are independent of the business, and they're the ones that are actually lending money to the business. So in that case, the creditors they become a creditor or a liability to the company. So by going with rule number one about coming in and going out, in our case, we apply the rule number one, which states that we should credit the increase of the liability. So that is the sort of the basic knowledge that you need to have in order to understand these transactions. And once you get into a bit more experience with talking to finance and CPA certified individuals, you'll have a stronger understanding. So let's see how actually it looks like in Business Central. So in Business Central, if you were to go in, you would have to go into the finance and into the general journals. We'll just select one of the general journals, and this is how it looks like in general in the actual system. So if I were to bring in some investment, we'll give a document number as investment. The account type is going to be bank account, and the description I put in as investing money into the bank or into the business, and the amount is $50,000. So in this left side, it's all about debit. So we're debiting the bank account here, and on the right side, I'm actually crediting a GL account, so 30100, which is the capital account. So this is a dummy account. It is a trial version of the system. So I'm just for basis of understanding, I'm using GL account as 30100. So this is how it will look like in the ERP system, and then all you have to do is simply post it, and then it will hit the appropriate accounts. Just as a disclaimer, the bank account has a posting group behind it. So if you don't know what posting groups are, make sure to go into one of my videos that talks about posting groups. So that's one of the things where you define your GL accounts. So that is something outside of the scope for this video, but understand the basics of accounting here. Okay, let's go back to our second scenario. So now, once we have some of the money of the capital, we're purchasing furniture. So Mr. Toronto decides to actually purchase some assets for his company, like chairs and a factory machine, manufacturing machine. So purchasing department buys something from their vendor. In our case, there will be 4 transactions. So debit and credit always goes together, so 4 in total. And in our first scenario, we'll be debiting our asset because we're actually bringing in the equipment, and the class of account is real. And we're crediting the liability because we're increasing the liability, right? So then going back to the same scenario there, so we credit the liability, and our chairs are the liability, which is accounts payable. So we're going to be, paying the vendor. The second transaction is about furniture manufacturing machine. So we're going to bring in the asset. So we're debiting the asset here, and we're creating a credit for liability, which in our case would be furniture account. So this is the simplest transaction of an accounting in our simplest books, you could say. And if we were to translate that into Business Central, so going back into Business Central, we'll go to home page. You simply go into the purchasing module, go into the purchase order. In this case, we're going to create a purchase order. So I've actually created a purchase order here. So this is our vendor, and some of the information is already here, has been configured. Feel free to go to one of my videos talking about purchase orders and how you create a purchase order, and what are the posting groups associated with it, and how you actually define posting profiles. In our case, for the chairs, right, the type is item. I have actually selected the description, the quantity here, and the amount that has been configured. And we'll also have a manufacturing machine as an item. So we're buying this from a specific vendor, and it's worth $20,000. So behind the scenes, our transaction, when we actually send it out, when we post it, send it out for shipping and whatnot, behind the scenes, our transactions are happening like this. This is how it's going to be set up. We're going to be debiting our asset account, crediting our liability account. So hopefully, actually, that helps you understand some of the basics of accounting. And I want to make sure that we have a better understanding of how the accounting actually works in the ERP system as well. So we'll continue to perform some more transactions as we proceed, getting into a little bit more complexity and how you're supposed to configure that in the ERP system. And just on the side note, if you are interested in exercising and building as well of your body, I have a sponsor who is hoping that you would check out his video. He has recently just launched his app, so it's called FitDrop, FYTDROP, FitDrop. So he also has a YouTube channel. So feel free to actually look into that if you're actually interested in making muscles, basically.